Let's see. So, yes, formed a new all-time high. It was about $2 off of where I thought it might be. I'm gonna have to spend some time tonight figuring out the next possible upside resistance. But getting pretty close to testing the top of this broadening wedge that we're currently in. Volatility picked up a bit today, pushed out the remainder of the sold calls to the upside. There's not much there above 50 55.40 as you guys could see last night. So from like 55.30 really out to like 5600, there isn't much on the chain. So, that's roughly the end of the short calls. We pushed into, not only did we push into Vega neutral, but we pushed above Vega neutral into close, which puts us in a very weird spot going into Monday. The market makers should sell off a bit in after hours in order to kind of balance out their hedge. So we may see this drop a little bit into Friday morning, where we have NFP data, which is obviously going to be by far the most important data this week. We also have the FOMC minutes today at 2 o'clock, but the market's already closed, so the effect of that'll largely be in futures. Clearly, the data doesn't matter. Yeah, it's pretty odd. I mean, the contraction that we're seeing in services is far too rapid, right? But we're not seeing this an equivalent contraction in prices. And services prices have been really sticky, right? And so, sure, it's good to see some actual economic contraction. But not only was services broadly in disagreement with the S&P services, like ISM was way off from S&P, but factory orders are plunging, right? Like those dropped 0.5 and 0.7%. Services business activity tanked, right? It was like the lowest level I think since the COVID crash. And prices are still really high. I mean, they're not as high as the last print, but they're still up there, like 56.3, right? Challenger job cuts, like labor still looks really strong. There's no reason to think that if we pump here more, the wealth bubble's not just going to reinflate and then spark another round of higher inflation into the back half of the year. So VN's they're different calculations. But we got the updated one intraday today, and it was 55.32. So those are old calculations, and they're a bit different than these. Hopefully everyone makes it to Monday with 10 figures. Jason Bowers, everyone have a happy 4th. No DUIs. Yeah, get an Uber. Anyway, yeah, let's go into the other stuff. We've got most of the calls squeezed out. We don't have breadth coming in, right? We've got RSP actually slipping a bit into after hours, but only up 4 points on the day. And it's been, breadth in the S&P has been declining over the last few weeks, right? So we're not, the other, 493 stocks are actually falling lower as more and more and more money is just flowing into the Mag 7. And, that puts us right at about the trend test here. I think Gamma Max is going to be, well, we'll figure that out tonight after close, because we're probably going to have issues with the early close. How can we just have a crazy day after crazy day? Can you spend some time with us after this market close, just going over what we've been seeing the last couple of days? Well, we kind of bottomed out on the like 54.50 level, where all of the bullish risk was exposed, right? And call sellers got a little over enthusiastic yesterday with the morning's data, and sold a shitload of calls from like 54.75 all the way out to like 5500, which then squeezed off hard on the bounce, right? And then today we got to squeeze off the slightly longer dated short calls that were above 5500. Right, so the calls that came in last Friday when we tested our all-time high, all the sold calls from last Friday, which were sold mostly out to this Friday, just squeezed off today, right? But above that, there's fortunately not much. Happy Independence Day, America. Yeah. Thanks, Navy Nuke. I mean, it's not really that complicated. It's just, generally hard to squeeze calls that are entrenched like that. I mean, it takes quite a lot of buying and vol selling to pressure those positions out, right? That's really what's crazy is the amount of like leverage that they're pushing into trying to drive this up. Because I mean, yeah, they got a little bit of easing in financial conditions today, but it wasn't crazy, right? I mean, they're relatively the same as they were last week. And dollar started bouncing back right away after its drop. And we're still not getting any breadth, right? So new buyers aren't coming online, which means that the weight of all of this momentum is put into the hands of very few participants. Out of everything in the index, I mean, I don't even know what like total percentage of the S&P the Mag 7 is going to be at the end of today, but it's definitely gonna be a new all-time high, right? Kenny, Jamie, Aladdin. Oh Jesus Christ! You guys spend way too much time on Super Stunk. Commodities up a little bit today, and we did eventually get oil moving back up again. We've got gold moving up with the drop in the dollar today. We should see that continue. Gold found some pretty good stability right around its long-term trend here. And it's starting to bounce off of it again, which, if it does break to the upside of this consolidation that we've had over the past few weeks, could be pretty bullish. And then we might get a new breakout on gold, with especially with dollar going down, right? Because everybody's gone long the dollar over the last few weeks due to the scares over in EU about with the French oats and Italian bonds and German bonds, right? And then with kind of the rocky presumptions about the Bank of England and whether they're going to cut or not. And we saw some of those EU spreads get pretty out there. I mean, fairly close to like the debt crisis or last decade, right? And so there was a lot of fear there. That saw a big influx into UST, right? And then now it's possible dollars falling back, right? And if we get more indications of economic contraction, dollar's going to fall back even more. And so that's going to probably scare a few people into gold, and gold might get a decent breakout soon. I've been adding to that little by little over the last few weeks, so kind of looking forward to see what happens there. By the way, the USD JPY shot right back up after tanking, and it's back at the 161.50 level. So there might have been a little bit of intervention in there somewhere, but it's hard to say. Correlation still just driving down like crazy. I think it's under 5 now. This is like a measure of, it's like the expected correlation between the top 50 stocks and the S&P. And so when it's falling over a 1 month period, when it's falling, there's a decrease in expected correlation among the stocks, right? So the stocks in the index are kind of moving independently of each other to an extreme degree, right? Meta and Nvidia still have room, nuts, yeah. Anyway, yeah, and we got a little bit of an uninversion in the yield curve today. Nothing crazy, but a decent move, right? The 10 years back at like 4.33. Happy 4th. Don't blow your fingers or end up in jail. You won't be able to buy puts with a crash on Monday. Not this Monday. Anyway, I'm not going to get into it. Does the Fed factor in what the markets are doing at all? Or do they just look to the data they collect? I mean, no, they don't. I mean, they look at the bond markets, but I don't think they really care about the equity markets. Thank you, Costellosaurus. Also, forward yield on volatility has still been picking up throughout most of this week. We have lows, but they're incrementally higher. Bond vol has moved up a lot, right? Bond vol's really starting to pick up here, and that in line with a potential uninversion of the yield curve would be very, very bearish, right? That's a strong signal that people are gonna dump equities and go long bonds. So we should definitely be watching the yield curve I know Poopy Pants is just running around going crazy about it. I don't know if it's something we have to worry about just yet, but if we get like a rate cut or something, it might become a concern very, very quickly. It's the yield on the forward convexity of volatility futures. Kirk, I am immortalized. Yeah, thanks for ensuring that TLT goes to 60 now. You're like the chicken that runs around and says the sky is falling, but then it just goes higher. I will be a buyer then. Yeah, you and everyone else. So tail risk still tail risk hedging still falling off. It's not much of the S&P really catching up, right? We still got 45.92% of the S&P is over its 20-day moving average. Everything else still below. And you can really see that here, right? If we look at like performance over the last month, it's all very, very concentrated into Apple, Nvidia, Meta, AVGO, Lilly, right? But broadly, finance is down. Even within tech, right? There's a lot of losers. And then you get out into the smaller components of the S&P, and basically everything's just bloody, right? Energy, utilities, services, durables, like consumer services, because the consumer's faltering. But you know, fun stuff. Also, the correlation between cash VIX and VIX futures is still slightly positive, despite all of this shorting. It's remaining positive, and I mean, this is a really long-term signal, but it's still showing that we're picking up more positive correlation week over week, right? And we have been for the last 7 weeks. So really since our bottom, we came out of our bottom in May, right? In the early part of May, we've been VIX and VIX futures are becoming more and more correlated. And, over time, that generally means a shift in the volatility environment. Lastly, Fed fund futures popping up a little bit today on the PMI data and now pricing in 0.35 rate cuts for 2024. I always sell TLT before it goes 300%. You're gonna hang out with us for 3 more hours? Oh, absolutely not. Today's top puts us in another test of the long-term trend here on SPX, out on the monthly. Shockingly, I was really close to, well, I guess we still have a little bit more room on the monthly. 55.64. All right, well, at least a test on the daily, which gives us our higher high for the week, but we do not have a higher low for this week. So this could still be considered moderately neutral, and we'll see what happens Friday. I don't have high expectations for Friday. If NFP comes in hot and labor's still really strong, even with the seasonal adjustments, we're bound to see an uptick in inflation. And even if they can seasonally adjust that away for a couple of months, it's still going to be building in the background. And then later in the year, when the adjustments flip back, it's going to be like, oh wow, look at all this inflation. Enjoy your celebration of Treason Day, everyone. Oh well. All right, guys, thank you so much for tuning in. I'm not going to be around tomorrow, but I'll see you on Friday. Paul Pickles picks out tomorrow night after I get home. Later, guys.